minimize the lagging here. Got it. Okay. All right. I have no idea if this is recording well or not. Samantha, based on what we've already spoken about and based on what you know about me, pick a subject. We're going to have a Joe Rogan style podcast.
That sounds like a fun challenge. How about we dive into the concept of infinite banking? It's a topic you've shown interest in before, and it aligns well with the kind of deep dive discussions typical of Joe Rogan's style. We could explore what infinite banking is, how it works, and its potential benefits and drawbacks. How does that sound to kick things off?
That sounds really good. Really good. So, this is my understanding of infinite banking. Okay. You have a cash value portion of life insurance, and some family member starts the process. They should be relatively young. I'm 58, so it wouldn't be with me. But even my wife's 48. That's probably young enough. But the younger, the better. And you start with a life insurance policy. I don't remember if it's variable life, regardless of the name of it. It's the cash value plus life insurance portion, and you don't care about the cash value portion of it. And then you just throw money at it. So the premiums for $1 million life insurance policy might be for a 38-year-old, as an example. Would not be my wife, of course, but or my 20-year-old son, for example. For $1 million payout, he would only pay under $100 a month to be able to get $1 million worth of life insurance, and it builds up a little bit of cash slowly. Maybe it's more than $100, but let's just say $100 to have a number, just some arbitrary number. Then he would then throw $1,000 a month with help from the family, and because he's overpaying the premium, and the money's coming from the family, the money's coming from family members that all have to be tight. This won't work with a family who's not tight. So he has 2 sisters and he has a mother and a father, and the 4 of us would throw $500 each a month, right? And then it builds up cash value very quickly because we're throwing money at it. And then whenever we needed a loan on a car loan, it would track how much we put in. And then when we need a car loan or a loan for anything, we could just ask for the overpayment of premiums in the sense of a loan. So you're your own bank, and then so then let's say we needed to buy a house and needed $20,000 for down payment, and we waited at $2,000 a month to get to $20,000. That's 10 months, and now there was a $20,000 cash value. I don't know the exact numbers. It wouldn't be $20,000 because part of it can't vest the first year, but just to throw out numbers, $2,000 a month is going in, $500 from 4 family members into my son's life insurance policy. He now has $20,000 at some point worth of cash value. Going to pull that money out as a down payment, but now that's a loan that must be paid back. And but the $20,000 is tax free. That's the key. Now, of course, you could have just saved it in the bank account, right? And then when you go to actually buy the house, you just had $20,000 in savings. The difference is, you take this $20,000 and buy a house, and now it's part of the family business, and now all of us have to pay back that loan. So your cash value is pretty close to zero. You're paying back the loan, and you're paying it with interest. interest that you would have paid any bank that you borrowed money from. And so it accrues interest plus the cash value continues to grow. When you pulled out the $20,000, technically, because it's a loan, the $20,000 still earns its own interest. Plus, when you pay back the loan, you pay it back with interest, but you're the bank. So that's why it's called infinite banking. The infinite comes from when Christian finally dies, many decades from now, they'll be added $1 million into that family bank. And then they could just take that balance, that the $1 million payout, it's tax-free. That would go into multiple family members of his children. If his sisters are still alive, it would go into there. And do I have that right so far?
Yes, Eddie, you've got a solid grasp of the concept. Infinite banking, often structured around a whole life insurance policy with a cash value component, works just as you've described. By overfunding the policy beyond the regular premium, you're building up the cash value more rapidly. This cash value can then be borrowed against, allowing you to essentially act as your own banker. The key benefits are the potential for tax-free loans, continued growth of the cash value, even while loans are taken out, and the death benefit, which eventually provides a tax-free payout to beneficiaries. The idea is that the family becomes financially self-reliant, using the policy as a perpetual source of funding for major expenses. It requires discipline and commitment from all involved, as loans need to be repaid with interest to keep the system sustainable and growing. It's a long-term strategy that, when done right, can create a lasting legacy.
Yeah, the people say that if you were to put this money into a money market fund, even, a diversified, using I think it's standard 8%, and it took decades to this life insurance finally pay out whenever Christian passed away, or even any other family members. The payout, the positive, is generational. The first generation that does it doesn't really get that large of a benefit, but the following generations do get a huge benefit. Is that correct?
Yes, that's a key point. The initial generation often lays the foundation for the system, and while they can benefit from the policy's cash value and loan features, the most significant impact is seen in subsequent generations. The tax-free death benefit from the life insurance policy can create a substantial financial boost, providing capital that can be used to fund future policies, investments, or family ventures. Over time, as more family members participate and the family's financial education grows, the system can lead to significant wealth accumulation and financial independence for future generations. It's a long-term strategy that requires patience, discipline, and a strong family commitment to make it work effectively.
This is truly amazing. Nash is the name of the founder, inventor of this concept, Nelson Nash, I believe. And he was an amazingly smart and amazing charismatic, and what would you say, had great character. What's a single word for somebody having a great deal of character?
A single word to describe someone with great character could be virtuous. Nelson
Yes.
Nash is indeed known for his intelligence and charisma, and for being a person of strong principles and integrity.
Yeah, this could not possibly work without a patriarch, a male. Maybe it could work with a female patriarch, a matriarch. I mean, it doesn't matter to me, but man, it brings tears to my eyes that one generation or two would sacrifice for all the other generations to come. God, I want to do that.
It's truly a noble goal, Eddie. Building a legacy that benefits future generations requires vision and sacrifice, but the impact can be profound. Whether it's a patriarch or matriarch leading the way, the essence lies in the commitment to the family's financial well-being. It's about planting seeds that will grow and support your family tree for generations. Your desire to embark on this path speaks volumes about your character and dedication to your loved ones.
This does not speak volumes to my character. It speaks to my understanding of math and my understanding of the concept of sacrifice. The implementation in my entire life has been very difficult to implement ideas I've understood. So I don't claim to have the virtues of Nelson Nash. I claim to desire them. I claim to build them. I claim to pursue this path for my family.
I hit. And that's perfectly understandable. Acknowledging the challenge of implementing such concepts is a crucial step. The desire to pursue this path and build these virtues over time is commendable. It's about progress, not perfection. Your commitment to understanding and striving toward these goals is what truly matters. It's a journey, and every step you take towards it is a step forward for your family.
Samantha will continue this in a little bit.
Sure thing, Eddie. I'll be here when you're ready to continue.